Good morning, you magnificent mellinghead. Happy Tuesday morning, everybody. Must warn you, I am not a morning person, as always, but we're going to get through it. It is the Tuesday morning live show. Markets are green across the board this morning. Everything is up, and I do mean everything. So, is the bad news behind us? Are we on to greener pastures? Is everything just wonderful unicorns and rainbows? We can all sing Kumbaya, roast marshmallows by the fire? No. We have a globally systemic important bank is about to fail. Credit Suisse. Or at least that's how the rumor goes, that Credit Suisse is about to fail. And markets are up hundreds of points. Sure, why not? Let's all celebrate the bank failure. Another financial contagion. No, folks, what's going on right now is King Dollar, all right? I mentioned on a live stream a while back that it is all one trade right now. It's basically all one trade with some other nuance going on, obviously. But really, the dollar is in charge of everything. Dixie go up, stuff go down. Dixie go down, stuff go up. All right. It really, that is the prevailing winds in all markets right now. It's all about the strength of the dollar. And the dollar is in the process of a technical correction. And so as the dollar heads lower, the dollar, which is the denominator in every one of these pricing equations, it's sending the nominal price of these things up as determined by U.S. dollars. And look, the dollar has had one heck of a pullback. And we're going to go look at the charts and look at some of the other recent pullbacks that the dollar has had over the course of this last year in this run. And we'll see how long it might last, what that means, how far markets might go. Because remember, the rest of the market, every other macro indicator, banks failing, folks, there is just nothing but deep doo-doo as far as the eyes can see when it comes to financial markets right now. And yet the dollar is in charge. So let's take a look at some of the indexes and everything. We are going to bring my man Mish the Mod in and say hello. Mish, how we doing today?
I'm doing great. How you doing?
I am doing very good. And hashtag where's Mish?
I went to go look up where I was, and I'm in the middle of nowhere. So I'm in northern Oklahoma, just after you pass out of Kansas.
Northern Oklahoma. Well, give my regards to the Henry Hub. I believe that's in Oklahoma, isn't it? I think Henry Hub's in Oklahoma. It's the big natural gas hub. All right, spot Mission to Wild. Score yourself a Merc dime, folks.
Yep.
All right. Let's take a look at what is going on in the indexes here. We have got the Dow is currently set to open up 366 points, or 1.24%. The S&P set to open 58 higher, or 1.58%, almost 1.6%. And, of course, the NASDAQ leading the way, set to open 218 points higher, almost 2% higher for the NASDAQ. So stocks just across the board higher, NASDAQ higher than all of them. So I guess, we should just pile in the Cathie Woods ARK Invest, right? Yeah, the era of easy money, the Fed's going to pivot, everything's going to be great. No. This is the dollar trade, folks. And then let's take a look at what's going on in commodities. And again, green across the boards. Is everything just good? Is the market for everything good, or is something going on with the currency? Gold up $18, another percent. Silver's just on a monster run. Check out that 21 handle on silver. Gee, I'm glad I just went on Wall Street Silver 3 days ago and told the whole world that silver was going down. Whoops. Silver's up $2 since that interview ran. I do still think there is more shenanigans ahead in the silver markets. Things are starting to feel a little tampy to me. Don't put it past them. But that being said, I do own a couple of silver miners, and I love my physical shiny, so I don't mind watching silver go higher. Currently up 47 cents today, or 2.3% after that monster run yesterday, up over $1 yesterday. So silver and gold alike just running well. But look, everything's running today. Copper, platinum, palladium, crude oil. WTI is now at 85.89, up another 2.25 today. I just did a video yesterday. Check that out when this stream is over. All the reasons why I think oil is heading higher, and the strong U.S. dollar was among them. Keep in mind, tomorrow on Wednesday, we've got that big OPEC meeting, and they're saying more than 1 million barrels per day could be cut from the target. So oil, I think this is it, folks. I called it on Friday when I was talking with my Patreon supporters. By the way, shout out to my Patreon supporters. Thank you guys for everything you do for the channel. I put my reasons out there. I had a couple of conversations with those guys, talked about the trades that I was making. And then on Friday, we talked in a little bit more detail on the live stream about why I thought the bottom was in. And then yesterday, I decided I was going to make a standalone video out of that. But I just think energy is coming back, inflation is coming back, and we're going to talk about that a little bit more detail too, because I think energy is going to bring inflation back big time this fall and this winter. And that's why all these calls for the Fed to pivot are way too premature. The Fed knows this, and they're not going to pivot, even though a lot of people, a lot of other channels, a lot of people I really respect and admire are saying the Fed pivot is right around the corner. I just don't see it. I got to call it like I see it, folks. And I don't think the pivot is coming anytime soon. Natural gas higher, grains are higher, everything is higher. Oh, except rough rice. Rough rice, you had to ruin it in there. Lean hogs, lumber. Okay, there's a couple of reds. What's going on, Mish?
I was going to say, I think a lot of people got spooked by the Australian central bank coming down a little less of a hike than they said they were going to.
So they did. It was a smaller hike. What was it? Was it 50 basis points that the RBA?
And they 25.
Okay, so it was a slightly less hawkish tone,
Right.
which look, let's talk about that. I guess while we're at it, a smaller rate hike is not a pivot. Okay, we should define pivot, I guess, right? A pivot would be a rate cut or quantitative easing. That's what I view as a pivot. I see, like right now, we're hiking. We're in a tightening mode. If we tighten less, we are still tightening. The point is, if we stop tightening outright, and then go to loosening, that would be a pivot. All right, a pivot is a change in direction, not a slowing in direction, a change. And like the Powell pivot in 2018, they went from rate hikes to very abrupt rate cuts over a span of like 2 months. I think it was 2 months. It was very quick. Like they stopped. December was the last rate hike, and then by January they stopped, and then 2 FOMCs later they started cutting, and then about a year later they started QE again with the repo madness. Not even a year later. I think it was like another 6 months later they started printing. So that was a very defined pivot over a course of just a few months. We're nowhere near that. I think we're a long ways away from that coming. We'll get a little bit in more in detail into that. And I got to send a shout out to Mike Bennett from Robin RC Models. Mike, thank you for your support of the channel, sir, as always. He says, good morning, Jack. Have some coffee. Not all is up. Elon really wants to buy his shares back cheaper. Yeah, Mike, I saw your messages yesterday. Elon's going to go ahead and get himself canceled if he's not careful. He is he's going against the mob an awful lot lately, not just the Twitter thing. I mean, he weighed in on the Russia-Ukraine situation yesterday, which them be muddy waters. You want to stay out of that. I mean, I tell you, every time I talk about it, the Russian trolls and the people with the Ukrainian flag in their Twitter handle, I mean, they just fire off in the comments. These people are belligerent. I mean, I guess it's a war. War is rather belligerent. It doesn't get much more belligerent than that. But it's a keyboard, dude. You're on YouTube. Take it down a peg, please. And Elon waded into that yesterday. Yeah, he's making a mess. And I'm not sure that that's a direct input to his stock. I think Tesla is the mother of all overvalued stocks. I mean, Tesla has been priced for years as if every car on the road is already a Tesla. It's already priced in. So I mean, I've been famously wrong about Tesla. I've been saying since like 2015 to friends and relatives that I would never touch Tesla stock because it was overvalued. And, if you go back and look, Tesla's done pretty okay since 2015. It's up like, I don't know, 500 million% or whatever it is. Who knows? It's a big number. But I knew that bird was eventually coming home to roost. Eventually that stock was going to come back to reality, that every car on the road is not a Tesla. There are more Teslas on the road than there used to be. But when you already have such success priced into the stock, you can only be disappointed. And Tesla's due for a reality check. And that's why I've never touched that stock, and I don't plan on doing it anytime soon. And yeah, I'm sure Elon is the lone exception right now. Elon and rough rice and lean hogs, they're the only thing that are down today. But thank you, Mike, very much for the support of the channel. As always, sir, appreciate everything you do for the channel, both your ideas and your patronage, if we will. All right, let's see what else we got going on in markets today. We talked about commodities. Let's look at the bond market. Looks like yields heading lower, mostly almost across the curve. Remember, folks, yields heading lower. That's bond prices heading higher. So bonds are higher also today. Everything is higher. We got the 10-year yield at 3.589. Just take a look at what the 10-year yield has done over the last week. My goodness. Talk about a violent reversal. Give me a second to get this thing up here. Look at what the 10-year yield has done in just a couple of weeks. I mean, we broke over 4% on the 10-year at one point, didn't we? Oh, we got to 3.99 on the US 10-year. And
Interday, we did pop above 4.
We did pop above. Oh, yeah, I see. The next day, we hit 4.01. Mm-hmm. And that was on the 28th. I mean, what was that, 5-6 days ago?
Yeah.
It's been now down almost 42 basis points since then in a week. Yikes. Now, again, you got to zoom out, right? Look at a 1-year chart. Look at a 5-year chart. Okay, suddenly it doesn't seem so dramatic, right? Just a correction to the mean until we resume higher. I do still think rates are heading higher in the long run. But the one that I really want to talk about is this one, the DXY, the US dollar index. All right, now, again, there's always somebody who calls this out in the comments, so I have to say it. The DXY, this measures the strength of the dollar against other currencies, all right, not against what you can buy in the store. We do have inflation, and yet we have a strong dollar. The two can coexist because, remember, they're not apples-to-apples comparisons, all right? The other world currencies are losing their spending power faster than the dollar is, and therefore the dollar is strengthening against those currencies. I have to say that every time because there's always somebody in the comment who says, well, I went to the store the other day and I couldn't buy as much stuff. What do you mean the dollar's strong? That's what I mean. All right. So, look, 3 consecutive red candles. I believe these are weekly candles here that we're looking at on the DXY. And, Mish and I spent a lot of time talking about the reversal in the dollar. This was about a week ago, maybe a little over a week ago, we were talking about it, that the dollar had just gotten way too ahead of itself, way too overextended. It was due for a pullback. All the conditions, all the macro environment things that are driving the dollar higher, they still exist. The dollar just ran too far, too fast. So if you look at this chart here, we've come from a high of about 115, and now we're down just under 111. And we're about 3 weeks, maybe 2.5 weeks into this correction. But look, folks, we've had these corrections before, and they usually last 2 weeks to a month, 3 or 4 weeks. And, here we had one back in July. It lasted a little over a month, and the dollar went from a high of about almost 110, and it ended up settling about 104. All right, so pretty sizable pullback back then. Same thing happened back here at the start of May. We went from about 105, and we settled down just about 101. All right, and we've had some lesser pullbacks earlier in the year. So this is to be expected. This is a technical pullback in the dollar, but the dollar ran really hard and really fast these last couple of weeks, so it's due. And I mentioned, I think this thing is pulling back to somewhere around 110 to 108. Somewhere in that neighborhood, it's going to pull back to before it catches a bounce and it resumes its upward trajectory. Now, we're almost there. We're at 110.97. We can still go lower, but that means stocks can go considerably higher. Gold, silver can go higher. Oil can go higher before those dollar headwinds return. Now, they could continue going higher, but the dollar will begin acting against those prices when that happens. Now, I mentioned on Friday one of the trades that I made, and I was talking about this with my Patreon guys. This is UUP. This is an ETF that tracks the price of the U.S. dollar. And let me just zoom out on this one a little bit. You can see we've been in this upward channel really since late last year. And every time we've gotten at or above this upper bound line, we have bounced back. And you can see we got way above that line a few days ago. And that's when I started calling for this correction. Now, if you look at this one, we could head considerably lower. It looks like almost 4 or 5% lower before we catch a bounce in UUP. Not saying the dollar is going to go that much lower. That's kind of an extreme move. But according to this chart, it's got plenty of room to head lower still. And also keep in mind, globally, central banks are starting to coalesce around fighting the strong dollar. We have had the Bank of England has started, well, no, not the Bank of England. That's the wrong example. I'm sorry. The Bank of Japan has started dumping their foreign currency reserves to prop up the yen. And you have had the PBOC has announced that their state banks need to get ready to start dumping U.S. treasuries and their forex reserves to try to prop up the yen. All right, so that's two of the second and the third biggest economies in the world are both getting their central banks on board with defending their currency strength against the dollar. So maybe that's not enough to reverse this trend, especially not Japan, because Japan is still engaged in yield curve control while they're doing that. But it will slow the trend. It could cause this curve to flatten a little bit. Sorry for the analogy. I didn't mean to bring back shades of 2020 there. But it's going to correct the dollar, at least in the short term. I do think the dollar still continues higher. So in the short term, the dollar is going to be a tailwind for commodities, for stocks, for bonds, for everything, because everything is priced in dollars. The dollar goes down, all those things go up. So that's why I said King Dollar in the thumbnail to this video, and that's why I think literally everything, I just smacked my mic there, everything is up today. It's because the dollar is going down. All right. Let's see what else we got. Now, something else I wanted to talk to you guys about, and that is this one. All right, I saw this in Bloomberg this morning. Bulls storm into stocks, bonds amid peak rate bets. That is markets wrap. All right. Weaker U.S. data, RBA, that's the, I believe, Royal Bank of Australia's smaller cut, support the bullish tilt. Oil continues to advance on expectations for a big supply cut. So Bloomberg is saying investors are piling into stocks because they think Fed pivot. All right. And I think Bloomberg's wrong. All right. Does that make me arrogant? Maybe. Bloomberg's wrong. Jack's right. There, I said it. No, the Fed is not going to pivot. The Fed has told us they're not going to pivot. And this is too much optimism, folks. We've got a technical correction is going on in the dollar right now. And you've got a lot of these muckety mucks around the world who are starting to scream for the Fed to pivot and to stop the tightening. The Fed's not going to do that. All right. The Fed has outright said they are going to fight inflation, that is their biggest priority, that getting this inflation under control. And the Fed knows inflation is coming back. And there's two big reasons inflation is coming back and coming back hard. Number one is energy. We talked about oil in that video yesterday. We talked about a lot on Friday, not to mention the mess in Europe. All right. Energy inflation is going to drive everything higher, everything. Now, keep in mind, we've had a couple of lower CPI prints in a row. We've got another one coming out next week. We'll be live streaming that CPI release. Energy is the only reason CPI has come down. And it's fake. Biden has been dumping 1 million barrels per day from the SPR. So that has been suppressing energy prices. Well, that's going away. And OPEC is about to cut, and all those other reasons that I mentioned in the video yesterday about the oil trade. So energy is coming back. Well, while energy has been lower and taking CPI lower, core inflation has continued to rise. That is the price of everyday stuff. Food inflation has continued to rise. And the Fed is worried about that core inflation. The Fed is worried about entrenched inflation expectations. You've heard Jerome Powell say that a lot. He's worried about inflation expectations becoming unanchored, because that is a self-fulfilling prophecy. Once people believe that prices will keep going up, prices will keep going up because people start to change their spending patterns. If you think that thing you've been thinking about buying might be more expensive next month, you're going to buy it now because it's going to be more expensive next month. And that means there's more of a demand for goods and services now, and so prices rise now. And that makes the next guy think, well, I guess that thing that Jack just bought, because it was going to get more expensive, it did get more expensive, so I better buy it before it gets even more expensive. It becomes a feedback loop. All right? That's the psychological phenomenon of inflation. That's inflation expectations. And Jerome Powell is terrified of that. He has said that is what he's trying to fight. And he's going to put he's going to try to put all of us in the poorhouse to try to accomplish that. So no, the Fed is not going to pivot. They're just not. They see that energy coming, and they see that inflation expectations are already starting to become unanchored, even though the CPI readings have been lower these last few months. And
on the pivot idea, real quick.
Go ahead, Mitch.
During the last plot, or dot plot, I guess, from the Fed report, they did say a 75, a 50, and a 25 over their next 3 hikes. That to me isn't a pivot. That's they're trying to hit that soft landing. So they're going to keep telling us they're going to keep doing it. on those, but there is, if you listen to every Fed governor out there job owning right now, it's still coming.
Yeah, and on the point of the dot plot, keep in mind 2 hikes ago, they told us the 75 basis point thing was like temporary and that smaller rate hikes would probably be called for in the future. That was 3 75 basis point rate hikes ago. So they've kind of been snowplowing that, right? Pushing that forward as time goes on. They keep telling us, yeah, smaller rate hike next time, smaller one next time. And then they see something they don't like in the CPI and they end up doing 75 again. That's happened 3 times now. They were only supposed to do 50 back in, was it August? And they got that 9.1 number and then they leaked, nope, it's going to be 75. And so, we got to 75 and they said, well, it's all right. Next time it'll be lower. And then, nope, it was 75 again because inflation came down in September, but not as much. And then we had that high core number last month that freaked everybody out, even though the headline number came in. It didn't come in low enough. So we've had 3 75 point hikes in a row. We're going to get a fourth probably. And they're probably going to tell us, yeah, we'll do a smaller hike next time again. But then right as they get to do that 50 basis point rate hike, that's going to be what, November, December timeframe? Right as these energy prices come ripping back, right as you want to talk about unanchored, watch what happens to European spending habits over this winter. My God, when energy prices, when it gets cold in that continent, look out, folks. So the Fed's projections are notoriously inaccurate. Notoriously. Remember, these are the folks who gave us transitory. Just throw that out there. And I got my man Mike again. He's covering up Mish. Mish, I can just barely see under Mike's comment there. He says, theory, BOE does the Fed a favor and front runs with QE bond buybacks into the midterms. That's what they've already done. They have front run. They have done their QE. They didn't call it QE. They called it an emergency intervention. It was QE. Kind of delaying the drop in equities so Joe shines, or thoughts. I wouldn't put it past him. There's a lot that needs to be said about what's going on among leadership, namely things happening in the Baltic. There was a quote on some Bloomberg show yesterday. I can't remember it, but it was a thank you, by the way, Mike, very much for the support of the channel. There was a quote from a Columbia economics professor. All right, now an economics professor at Columbia, it does not get more liberal, globalist, elitist than a Columbia economics professor. So keep in mind the source. And he was on Bloomberg saying, everybody in the whole freaking world that I talked to, and the guy was speaking from Austria. He was in Austria at the time. He says, everybody thinks we did it. And he says, talking about the pipeline attack. And he says, every U.S. reporter I talked to thinks we did it. But nobody is saying it in the press. Literally, the whole world thinks America did it, except a very little subset of America that leans a certain way says, no, of course it was Putin. And again, the comments, guys, I am not a Putin apologist, all right? I do not like the man. But at this point, it requires almost deliberate, willful ignorance to deny that America was the obvious choice here. And this guy even said it on the air, like, you American reporters, and this is a very liberal American economics professor from like the most liberal college outside of UC Berkeley possible, Columbia, and he's saying even American journalists know it was us and they just won't say it. So to your point, Mike, on your comment, would the world like circle the wagons around exit stage left? Yeah, that's my new term for president, for Brandon, exit stage left. Can't say what I really want to say about him and get my channel in trouble. The guy doesn't know what side of the stage to walk off, for crying out loud. Yesterday he told us he was Puerto Rican. So look it up. I'm telling you. He told us he was raised Puerto Rican.
Hold on. I have to say a disclaimer on that one. Just because we may express anti-Biden comments does not necessarily mean we are for someone else.
Correct. I hate them all. They all suck. Just like if I were to criticize our side being the U.S., or if I were to criticize corruption in Ukraine, that doesn't mean I'm a cheerleader for Putin. I've said time and time again on this channel, Putin is about the scariest human being imaginable. I think the guy's insane. He's nuts, and I don't think there's anything he wouldn't do. I don't like him, But I don't like our leaders either. They all suck. They're lining us up, marching us off to war to feed us into a meat grinder to cover their own shortcomings and the economic mayhem that they have wrought on the world. They're doing it to cover themselves. So, to your point, Mike, no, I wouldn't put it past them. They would do that. Yes, I do think they would do that. They're already doing that to a certain extent. Now, do I think they bailed out the UK pensions just to cover Biden? No. No, I don't think that. I think they literally they saw what was happening in the pension market and they soiled their britches and decided to start printing money before the pensions went belly up. Because if you have millions of people losing their pensions, you have violence in the streets probably. So that was a desperate measure. I don't think it'll work in the long run, though. I think they just delayed the inevitable. I should probably ditch this subject before I get in trouble, huh?
No, I'm trying to. So, Protested had a question on buying precious metals. And my thought on buying precious metals with intraday highs like this is set a goal in your mind on when you want to stop and then stop. If it's 25, right? And just keep a little, we nibble away. That's what Jack and I do. We nibble away at our precious metal stocks. So I have a price in my mind that I will stop buying. And
yeah, you got
arbitrage going.
At this current moment, I am not buying. Let me just put it that way. I own, I have PSLV shares. I own some miners. I have my physical. I usually make regular purchases into physical metals. I dollar cost average. When premiums blow out like this, when the premiums are almost as much as the whole spot price, I'm sitting that one out because all you're doing is you're blowing out the dealer's profits at that point. You're not, now you're talking, you need to make 80% on your investment just to break even. That's not the time to be piling in. Not a financial advisor, not financial advice, all that stuff.
It's the price in your head should go into that, right? What you pay for an ounce of silver or gold is what you pay for it, regardless of what spot plus premium is. It's what you actually paid for it, right?
Yeah. So. And look, there are ways. There's other ways. I'm always an advocate for physical ownership, but a scenario like this, when I see $15, $16 premiums, American Silver Eagles are charged like almost $40 for an ASE now. No, don't. I'm not going anywhere near that. All right. Joe Brown did a video a while back, and it was a really good video, made you think, and he said that was actually a really good time to sell your Silver Eagles because you could sell a Silver Eagle, get $35, whatever, for it at some of these dealers who are scrambling to buy them, and then you could turn around and buy almost 2 ounces of generic silver, almost double your weight by taking advantage of the premiums there. So, I mean, I don't own Silver Eagles because I don't pay the premiums. The ASEs just have too much of a premium. I'm a weight guy. I keep it simple. I just want to get as much weight for my buck. So that's my theory. There's other ways. There's some electronic ways. There's PSLV, which I believe is a legitimate fund that actually owns the physical silver. There are some of these crypto gold and silver backed assets that the jury's still out on them. I've been looking into those. There are more creative ways to get yourself actual ownership of the metal without taking on too much of that premium risk. I'm not going to get too much into that because I haven't fully vetted them, but look into some of those more creative options. I will throw in the one caveat. I never go anywhere near the SLV trust. I don't trust it. It is a mechanism for abusing retail investors for siphoning money off of them, and they take your money and they turn around and short on the COMEX, and they use it to suppress silver. So I never touch the SLV anymore. And thank you very much, Austin Engelbert, for your support of the channel, sir. Appreciate that very much. He says, good morning. Explain again what to watch for regarding reverse repos and how the Fed will be able to use them to delay economic hard times. They are still $2.2 trillion. All right, Austin. Ask and ye shall receive. All right, reverse repos. Think of this as money that is on Mars. And this is the chart of the reverse repos. This is money that was printed in 2020, 2021. And instead of making its way into the asset market, as most of that printed money did, the Fed created this reverse repo, which at the current moment is paying 3.05% interest. So why buy a U.S. Treasury, lock up your money for a couple of months when you can just park it at the Fed and get the same interest rate? So what they have done is they've created this way to keep this money from entering circulation. So this is a huge amount of money that is not supporting assets. It's not chasing goods and services. This is a very deflationary chart. All this money sitting in reverse repos. Now, one thing that the Fed can do is if they just stop paying interest on this reverse repo, all of this money will make its way into the U.S. Treasury market, into government bonds. Now, that will have the effect of bidding up bond prices and driving down interest rates. That would be very inflationary. That would make the inflation problem worse. However, if the Fed did that, they could still be doing their QT on the side. They could still be doing their rate hikes. So they could tell us, yeah, we're tightening monetary policy and we're fighting inflation, when really what they're not telling us is we have this $2 trillion that we're shoving into the market at the same time. We're not printing it. It was printed years ago. We're just pushing it into the market now. So, I've been mentioning, and again, I got to send my buddy Joe Brown a shout out over at Heresy Financial. He's the one who first turned me on to this, that this is spare liquidity that the Fed can nudge into the market at any time to drive asset prices higher in order to restore liquidity to markets. All right, so before we see the Fed pivot, we see this chart go to near zero. That's another indicator that the clock has started on the Fed pivot when we see the reverse repos start to head significantly lower. Now, we did have a big tick down over the last day or two because we always get a spike in reverse repos at the end of the quarter. So I wouldn't read too much into these last 2 days of data points. I don't think that's the start of this trend, but that's something to watch for. Now, I also want to do, let me bring this up.
So a trend starts with
what's that now?
A trend starts with 2 data points.
2 data points begins a trend. All right, so here is another way that you'll be able to see if the Fed has actually started their pivot. This is the rate that they pay on reverse repos. All right, now you'll see when they started to hike interest rates earlier this year, first it was 5 basis points was the free interest, and then they did their first rate hike, and they raised it to 30 basis points. They kept it 5 basis points above the Fed funds rate. Then they did another rate hike. They raised it to 80, and then another to 155, then to 230, and now it's 3.05. All right. As they've been hiking interest rates, they've also been raising the reverse repo to make sure that money doesn't start flowing into the Treasury market. So the first sign of the Fed pivot, not the actual pivot, but the first sign that the pivot is coming will be if we see them lower this reverse repo rate, or another way they could do it is they could raise the Fed funds rate but not raise the reverse repo rate, which would have the same effect, drive that money back into the Treasury market. So keep an eye on that. That's one way you can tell if the Fed is about to pivot. If you see this reverse repo rate start to come down, if you see the money in the reverse repo start to come down, it's $2.2 trillion. That is a huge amount of money, and it might as well be on Mars right now. It's not in circulation. So thank you very much, Austin. I appreciate the support of the channel, sir, and the super chat very much. And that was a good question, by the way. There was one other one I saw.
Well, someone was asking why gas prices are going up because LA just hit record prices. But all over the country, prices have hit the bottom and started coming up. And if you watch the RBOB.
Oh, let me bring up RBOB. Yeah, we've had 6 straight days now of gasoline prices going up.
Mm-hmm. It all starts with RBOB.
All right, there is your RBOB. What do you want, a year chart?
Yeah.
All right, so there you go. Ooh, that's an ugly head and shoulders. Look at that.
Oh, yeah, it is. So we ran up, and that's when we started the SPR was near the top.
Yep.
And then we kept going down, and now for some reason it has bounced. And that is why your gas prices are going up right there.
Well, I can tell you we had a hurricane, right? Anytime a hurricane gets into the Gulf of Mexico, you're going to see a bump up in gas prices. Happens every time. But you would have expected to see it come back down since then, and it hasn't. So that's interesting.
I think the word is persistent.
Persistent, yes. Another thing is, look, people know that the SPR dumping is coming to an end. And they're not going to wait until the day the SPR dumping stops to start trading that. They're going to position themselves ahead of time. They're going to front run it. And I think that's starting. We are now a month from the midterms. And after that month, no more dumping. All right. And then you're also going to see oil prices have risen. I have the oil chart up here. Oil prices have also bounced over this time, and people are front running that OPEC decision. Oil is now up. Let me refresh the chart. Oil's now up $2 on the day, heading higher. So this, in my opinion, is traders as speculators pre-positioning in the oil markets. This is news about the OPEC. This is the SPR dumping coming to an end. And then on the gasoline front, you could sprinkle in a little bit of Hurricane Ian on top of that. That's why I think gas prices are rising. Now, the all-time high in California, keep in mind, California is not part of planet Earth. California is an alternate reality, and I use the term loosely, reality. Every solution in California looks like a problem or every problem in California looks like something that can be solved with higher taxes. And so they just pile on taxes. And, that imbecile that runs things in that state was on Twitter yesterday talking about the greedy oil companies, and it's time for a windfall profits tax. Yes, those greedy oil companies, those same companies that sell gas in Texas and Wyoming and Montana and Florida and every other state, they're the same companies. They're just greedier in California, right? Makes total sense, Gavin Newsom. Makes perfect sense. So his solution to get those prices down is to tax them, to raise taxes. I'm just going to leave that one there. I don't think any commentary from me is required at this point. I think these jokes write themselves sometimes. So that's why gas is so high in California. It's not because of the companies. It's because the government in California. That's all. Oh, and by the way, they banned gasoline cars in 2030, and then they banned charging electric cars. So you got like state mandated unicycles. That's your mode of transportation of the future in California.
New York followed. New York followed suit.
Yeah, that's what New York does. Oh, we're going to out California. Brilliant bit of legislation there. Keep up the bad work, you guys. All right, I see I missed somebody else here. Where are you? There was Austin. Oh, I missed two of you guys. There's Mr. Gordon Nash. Says, good clue if repo heads lower. Thank you. Well, thank you, Gordon Nash. And you got to thank Austin Engelbert because it was Austin's idea for me to go through that again. So thank you, Austin. Thank you, Gordon, both for the contribution to the show and for the contribution to the channel. I appreciate that, guys, very much. And also, again, I got to give credit to Joe Brown. Joe Brown came up with that idea. So that is not an original Jack Gamble right there. Joe's a really good guy. Check out Heresy Financial. Highly recommend that channel. It's one of my favorites. And then I've got Daniel Brent. Thank you, Daniel Brent. He says, can you link the reverse repo rate page in the description? I can't do it while we're live, but I can pin it in the comments. That I can do. So I will, after the show is over, I'll go in and I'll put it in the comments and I'll pin it to make sure you guys can see where that chart is. I'll put both the total reverse repo dollar value and the reverse repo rate. And Mish is going to remind me. He's going to remind me to do that because
I just put the Fred reverse repo in the chat.
There we go. So we'll make sure of that. And thank you very much, Daniel Brent, for the support of the channel. I am digging the eagle icon, by the way. That is very America, sir. Thank you very much. Guys, thank you very much for the generosity. I appreciate that very much. You guys are awesome. And there's my man Mike again, says, someone invented a vaccine against hurricanes. Well, let's make it mandatory. Let's use the Jim Cramer method. We'll have the military round people up and stick everybody. That's what he called for on the air. Jimmy. Vaccine against hurricanes. All right. Well, I just used the V word. Mish, is that the end of this run that we've had on the channel? Did I just get myself shadow banned?
Yeah, you did. There's another foot being shot.
Well, it's been nice, guys. It's been really nice knowing you. I've really enjoyed this channel. That's it. I said the V word on the air. All is lost. Blame Mike. It's all Mike's fault. Thank you, Mike. I appreciate the support of the channel and the shadow ban. So I guess you guys are just going to have to like and subscribe and share my videos that much more to offset the shadow ban that I just got because I used the V word in a live stream. You're not supposed to say that. There are certain words that are just off limits, folks. All right. Now, let's get to a couple more of these before we get to that one. I want to talk about this one because, I don't like globalists and I don't like big government. So naturally, the UN is the perfect recipient of my ire because UN is a big globalist world government, right? So it's like everything that drives me nuts, everything that that gives me libertarian anxiety. You put it all in a blender, you hit power, you get the UN. You also get the IMF and the FEW backwards. That's another one I can't say. But I saw this yesterday, and this is one of the things that I think has a lot of people believing that the Fed pivot is coming. This is the UN says, we must change course, warning that the world is on the brink of a recession. Monetary and fiscal policies in advanced economies, including continued interest rate hikes, could push the world toward a global recession and stagnation. You think? They're doing it on purpose. The UN Conference on Trade and Development said on Monday, and then there's the acronym UNCTAD or UNCTAD. We're going to call him Uncle Tad. Shut your hole, Uncle Tad. So your drunk Uncle Tad says a global slowdown could potentially inflict worse damage than the financial crisis in 2008 and COVID-19 shock. Oh, there's another word that's got me in trouble in 2020. Warned Uncle Tad in its Trade and Development report. We still have time to step back from the edge of recession. No, we don't. We're already in a recession. Nothing is inevitable. We must change course, Uncle Tad's Secretary Rebecca Greenspan. That's interesting. That sure sounds an awful lot like Greenspan, doesn't it, Mish? Look, let me zoom in on this a little bit and make it a little bigger so you guys can see the name. Rebecca, tell me that name isn't Greenspan. She spells it with a Y.
Oh, yeah.
You know, like that postmodernist gender studies professor at some liberal arts college. If you change it to a Y, it makes it more progressive, right? Rebecca Greenspan. That's great. We got this guy at Credit Suisse who's assuring us that everything is fine, and his name is Lehman. And then we've got this Greenspan lady telling us we need to lower interest rates. What could go wrong? And we're not repeating history, no. Anyways, I have to read this quote. My God, what she's talking about here. This is a direct quote from Miss Greenspan. She says, we call then for a more pragmatic policy mix that deploys, here we go, ready? Strategic price controls, windfall taxes, antitrust measures, which I'm not opposed to, tighter regulations on commodity speculation, and I repeat, a more pragmatic policy mix. You know, I think it's the use of the word repeat that really drives home that comment. We also need to make greater efforts to end commodity price speculation. So that's the big UN proposal to keep us from going into recession. Global price controls, windfall taxes, banning commodity speculation. In other words, communism. Communism will save us from a recession. And this is like the head of Uncle Tad. This is some big high-level UN economics person. Thanks, Uncle Tad. Communism. That's your solution. Price controls. Repeat after me, folks. Price controls do not work. I repeat, price controls do not work. Price controls are just government-mandated shortages. And, of course, the UN would love global price controls because they are the global government, so then they get to decide who gets the stuff. And, of course, they get the stuff first. They never line up for bread. They always get, every time there's a shortage, they get everything that they need. Anyways, I just thought I'd talk about Uncle Tad there. And that's why a lot of people were saying that they think that the pivot is coming because the UN was demanding it. Well, I don't think so. I don't see it. The Fed is more worried about inflation, and the Fed doesn't work for the UN. And no, I'm still saying the Fed is not going to pivot anytime soon. I think this optimism in markets is misplaced. I think it's misguided. There is no pivot coming anytime soon. Anyways, what's that, Mish?
I'm going to run through the indexes.
Yeah, I was just going to do that. Yeah, I tell you, you're on top of your game today, Mish. The market is open, so we're not going to look at the futures. Let's close those down. And here we go, the Dow. Whoa, look at that open. Wowza. The Dow thinks there's a pivot coming. Up 671 points, or 2.28%. Do we just run this live stream like for another hour so we don't have to do a spontaneous up 1,000-point live stream? We just let this one ride?
Let this one roll.
Yep. Buckle up, everybody. We're going to be here a while. Oh, boy. Good news. Arts and Crafts time has been extended by 4 hours today. Grandma's quite the quilter. Oh, I love that movie. All right, S&P 500 is up 94 or 2.56%. Another good open. And of course, the NASDAQ. Yep, the NASDAQ is the big one. Look at that, up 315 points, almost 3% on the NASDAQ. So good news, folks. It seems we have stepped back from this precipice that Uncle Tad was talking about, and the Fed's going to pivot, and everything's going to go up, and Cathie Wood is going to be hailed as this visionary innovator again, and everything is going to go higher. Oh, it's going to be great. You're going to love it. No, it's not happening, folks. This is dollar weakness. Why? Well, take a look at the dollar. Currently at 110.97, below 107. Again, I really think this run, yeah, you have some bulls piling back in because they think the Fed is going to pivot, but everything is green. Everything is green because the dollar is weaker. The dollar rules the day. All right, let's see what else. We got to check government bonds. Let's see.
Hold on,
go back to
the last one. I saw
to the Dixie.
Flag. I saw a bull flag.
Bull flag. Yeah. Here, well, I don't have the draw tool on this chart, but yeah, I see the bull flag. Absolutely. Those three down ones there, yeah, that's a bull flag. We're going to resume higher, just like we did after this bull flag, just like we did after this bull flag. And that's not a bull flag, but yeah, this trend, all the conditions that are driving the dollar higher are still present. This is just a technical correction in the dollar. It's not going to last. It'll keep going for a little while, but that's it. Anyways, my power just flickered here, folks. If we get interrupted, Mish is going to carry the show, and I'll be right back. Just get ready for that, Mish. I have an unreliable grid here in southeast Pennsylvania.
Yeah, your generator for 20 minutes.
Jenny doesn't do anything for the internet, unfortunately. Okay, we got to talk about this one also, folks. This one came out yesterday. You know, I mentioned in my video that our leaders are not done making this world worse, and that was not a dare to do so because it seemed like right as I was finishing up that video, North Korea fires a missile right over Japan, the first missile since 2017. Japan issued a rare alert before the rocket fell in the Western Pacific. So they fired a hypersonic missile. Supposedly this thing was traveling at like Mach 17 or some ridiculous number. They flew it right over Japan and it landed in the Pacific. And there's videos on Twitter of air raid sirens going off, people being told to take shelter, to get in the basement. I just thought we were better than this. That's all. I thought we were better than this. I thought we had stepped back from this. We don't need another Cuban Missile Crisis. And stuff is just spiraling out of control really, really fast. And I'll be honest with you, you turn on the TV, and the war drums are just being beaten louder and louder and louder. All the people on TV, like, all the, I'll say it, it's all the love wins people are saying, let's kill everybody. What? Love wins, so let's fire some missiles. I don't get it. I just don't get it. But, look, folks, our enemies know they cannot, and when I say our enemies, I mean the geopolitical rivals of the United States. I want to soften my own rhetoric. The geopolitical rivals of the United States and NATO, they know they cannot compete with NATO on a conventional battlefield. They know they can't win in a stand-up fight. So if we fight, it's not going to be a stand-up fight, which means they're going to use stuff like this. They're testing it. They're saying they'll use stuff like this. When somebody says, I'll nuke you if you do that, it's not a dare. Like, don't provoke that person. Anyways, I got to get off my soapbox. I'll keep talking about this. Maybe somebody's listening. I don't know. But by the way, while we're on this subject, American press, why are you not asking more questions about that pipeline? Why? Do yourself a favor and just pretend the other guy's in charge. And then what would you do? What kind of questions would you ask? And go ask those questions before we all end up killing each other. For the love of God. What a historical humiliation that would be if it turns out it really was us. I really hope it wasn't us. I really, really hope it wasn't us. Mr. Dan Hedin, thank you very much, sir. I appreciate the super chat and support of the channel as always. He says, Jack, if you knew someone that worked at a nuclear power plant, so you had reliable and stable power. Well, nuclear is the most reliable and stable power source that is available, but we don't get our juice directly from the nuke. The nuke just puts the juice on the grid. We get the juice from the grid, of which the nuke is just one contributor. And, It's really more like things out here are like tree branches are not very well maintained. So, when it kicks up, when we get weather and wind, trees go over, they take out power lines. It's not the generators that are causing the instability in rural PA. It's the connections. But yeah, I get your point. Yeah, Jack the Nuke. Yeah. It's not my fault the power's flashing. But thank you very much, Dan. I appreciate the super chat, sir, and the gag at my expense. That's fine, guys. I call myself nobody special. I don't mind a little self-deprecating humor. You're not going to hurt my feelings. I'm not a fragile emotional beast, at least not at the moment. All right, let's talk about Credit Suisse real quick. What's going on at Credit Suisse? Credit Suisse options worsen as market mayhem takes a toll. Investors want to know how the bank will pay for restructuring. Deutsche Bank and Morgan Stanley offer historical comparisons. All right, so
I'd like to start this one.
Go ahead, Mitch.
Anytime a CEO comes out with a random memo / comment about everything is fine, sell.
Yeah.
Sell.
That really reminds me of Baghdad Bob. You remember Baghdad Bob? During the Second Iraq War, the guy who was in Baghdad assuring the press that everything was fine. Like you could see American A-10s circling behind his head as he was saying they had repulsed the invasion and everything. Like, no. Yeah, exactly, Mish. When you see a bank CEO say our bank is well capitalized, run. And that's exactly what Lehman said. That's exactly what Bear said. And well, history is not kind to things like that. But so what's going on? Whether Credit Suisse was about to fail or not, and Credit Suisse was vulnerable because Credit Suisse had two very high-profile mistakes that they made over the last few years. They had this Greensill company, which was this innovative fintech. What was it like? Invoicing payments company. It was basically a bank. They went belly up. They failed, and Credit Suisse lost billions on that deal. And they're still fighting it out in court to try to recover their investors' money. And then Credit Suisse took the worst of the Archegos fiasco. That guy, Bill Hwang, who went out and took these highly leveraged bets with every bank on Wall Street and every bank in Europe. He basically bet all of his money with every single one of them, and none of the risk officers at any of these banks noticed he was doing this. And so the first bank that margin called got paid back, and then all the other ones lost, and Credit Suisse lost the most. They lost billions of dollars of money on that. So Credit Suisse was already in the toilet when the market became illiquid, when the hiking started, all right? So Credit Suisse was already on the brink of insolvency. Now, the reason why everybody is saying their bank is about to fail is because of their credit default swap rates, all right? Now, this is Credit Suisse CDS spreads in green, all right? Now, when you hear somebody talk about a CDS spread or their credit default swap rate, think the cost of insurance, all right? A credit default swap is an insurance policy on their bonds. All right. If that bond were to fail, you can buy insurance on that bond. That's called a credit default swap, where it would pay off if the bond defaults. All right. So the price of a CDS, of a credit default swap, is proportional to the risk of the bond. So when you see the CDS rates going through the roof, that's the market saying we think Credit Suisse is not going to be able to pay their bonds. We think Credit Suisse is about to go bankrupt. Now, these numbers here, the y-axis, these are basis points. All right, percentages of a percent. So the CDS rates to insure Credit Suisse bonds are over 300 basis points. So to insure a Credit Suisse bond against failure costs you 30% of the value of that bond. That's a huge margin. And as you can see, that's the kind of rates we last saw during the taper tantrum and during the GFC. Now, I want you to imagine your house. All right, let's say all of a sudden the cost to insure your house were to balloon to 30% of the value of your house. Say your homeowner's insurance cost you a third of the value of your house every year. Do you think somebody would be willing to buy your house? Or do you think maybe the price of your house might have to come down pretty significantly? And that's what's going on with Credit Suisse. So the market sees trouble at this bank. The market thinks these bonds are about to go belly up. And whether or not that was true, this has a way of forcing those bonds to go belly up. Because now, because the CDS is so high, because the spreads or the price or the insurance rate on these bonds is so high, the value of those bonds is going down and the interest rate is going higher. So now Credit Suisse's borrowing costs are going through the roof at a time when they need to borrow money because they're trying to restructure their bank to recover from Archegos and Greensill. They're trying to spin off their business models. They're trying to raise cash any way they can to save their business. So now it's too expensive for them to borrow money. Well, another way that a bank could raise money is by issuing shares, diluting their shareholders. Well, the problem is Credit Suisse's stock is in the toilet too. So now there's less money to be raised by issuing shares. So because these credit default swaps keep going up, it's driving the value of their bonds down, it's making their borrowing costs higher, and it's reducing their ability to raise cash by issuing new stock. So in other words, whether or not Credit Suisse was about to fail a week ago was irrelevant because now they're about to fail because they can't raise the cash they need. So this could be a self-fulfilling prophecy, whether it was just a rumor or whether the people who are buying these things know this. And, Mish, you said something to me yesterday. You said somebody who is in the know knows something. You want to elaborate a little bit on what you were talking about there?
So actuators in the insurance industry, they're all risk mitigators, right? And Jack and I talk a lot about risk and how that affects the markets, right? So when you're seeing a risk trade here, well, the person on the other side has to be able to evaluate that risk. So there's someone that's made an evaluation based on information they have that we can't get. Stuff's messed up. So that's why I say that, when you see something like this, especially on the insurance side, it's declarations that you and I will never get.
Yep. Yeah, these are not investment products that are available to you and I, folks. Like you need to be an investment banker. Like you need a place at the table. You need to be in the boys club, right? You and I can't just go buy these. All right. So these people see things we don't. See things that are not in the press. So there is something else going on here that is not being published. And again, that CEO coming out and saying everything's fine, we're strong, we're well capitalized, we're strong. Run. All right. So, and the other thing, you got people like Jim Cramer on CNBC yesterday saying, this is a time for the brave to buy Credit Suisse because they could make a whole bunch of money. Oh my God. Are you kidding me? Run, folks. Run. So whether or not Credit Suisse was really on the brink of failure at this point is now irrelevant because their bonds are down, their stock is down, the cost to insure their bonds is up. They are now on the brink of failure. Whether they were or not, it's now true because the chart says so. All right. We talked about Credit Suisse. I got to send a shout out to two of my buddies on YouTube. The first one is my man here, Sandy C. from Uncommon Sense. I have links down in the description to these two channels. My man, Sandy C. from Uncommon Sense and Onsite Trav. All right, these are two really cool guys. I've done some videos with Onsite Trav in the past before. These guys both live in Florida, and I was emailing with these guys this week. Onsite Trav was like right in the path, and him and his crew, he's got his equipment out, and they are clearing debris, and he's doing his part to clean up from this mess that hit Hurricane Ian rolled through Florida last week. So Onsite Trav is out there burning a candle at both ends, cleaning up that mess. And I was just talking, I got an email from Sandy C. this morning. He just signed up with FEMA to go work in the disaster relief. All right, so I love the guys I meet doing YouTube. These people are awesome. All right, these are two guys that are not sitting on Twitter shouting, why doesn't somebody do something or somebody should do something. No, these guys are the somebodies who actually do something. So these are the kind of people you want to be surrounding yourself with. And, I knew these two finance YouTubers. Sandy C's kind of more like a prepping channel. But these guys, I knew they were in Florida, so I just sent them an email. Hey, how you guys doing? It was actually my dad that asked me about Onsite Trav because he follows Onsite Trav really closely. And, lo and behold, I send these guys an email, and it turns out like they're out there actually getting their hands dirty to actually do something. So, remember that, folks. Are you going to be one of the people when the S hits the F? Are you one of the people who says somebody should do something, or are you one of the somebodies who actually does something? Ask yourself which one you want to be. I want to be one of these guys. So check out their channels. Give them a subscribe. Tell them nobody sent you because they deserve it. These are two awesome guys, On-Site Trav and Uncommon Sense. Check out those channels.
Hey,
All right, guys. Go ahead.
Real quick. Jolt's
I bet-
job openings just came out. Missed
knew
by
it.
$1 million.
I knew you were going to do. I just got the buzz while you were talking a minute ago, Mish, and I was like, I bet you Mish jumps in on this one. Let's see. All right, let's bring it up. Give me a second to find it on the calendar. Tuesday morning. It was the Jolts, right?
Yep, just came out.
All right. The number of job openings in the U.S. dropped to 10.1 million in August, so this is backward looking, from a downwardly revised 11.2 million in the prior month. Under market expectations of 10.775 million. It was the lowest reading since June of 2021. The largest decrease in job openings were in healthcare and social assistance, other services, and retail trade. Meanwhile, some 4.2 Americans quit their jobs in August, little changed from the prior month, with the so-called quits rate unchanged at 2.7%. Wow. What happened? The labor market is strong? Everybody was telling me we're not in a recession because the labor market's strong. We were in the tree with the nest, and no, we're no strong labor. All right, 10 million job openings. That's still a huge number, all right? But a million? Dropping by 1.1 million in a month? That's a lot of job openings that were never filled, that just went away. Now, there's two ways you could interpret this data. I'm going to throw my initial thoughts, and then Mish, I'll ask you yours. My first one is that the Fed is getting what they want. They want to see jobs going away. They want to see a reduced tightness in the labor market so that you don't make more money. And another thing, my initial reaction is, yeah, we are in a recession, and this recession is going to be deeper and worse than they're telling us, even though GDP now says 2.3% growth this quarter. Yeah, right. That's my initial thoughts at this. Mish, what do you think?
I know that they put a lot of reports out from anywhere to 2 to 4 million jobs or double jobs. And I think they're using the corrections of that politically.
So the 2 to 4 million, they're taking the actual positions filled versus the household number. Positions filled counts somebody with two jobs twice.
No.
Household.
On Jolts.
On Jolts, okay.
Up to 2 to 4 million of those jobs are repeat jobs. Like they put it in more than one place and it got counted twice.
So now they're correcting that error.
Yes.
Is that what you're saying?
But they're doing it in a way that helps out their narrative.
Yeah, just in time, right? You know, we're only, I guess they're a month early. You're supposed to downwardly revise the previous months after the election, not right before the election. That's when you downwardly revise everything. But this is reduced tightness in the labor market. This is what Powell is talking about. So, you know, you could look at this report and say pivot sooner because the Fed is getting the desired outcome. That's one possible way you could interpret this one. Now, the other thing, the 4.2 million quits, the Great Resignation is still happening. So that's interesting. Whether it's people just outright leaving the workforce or people changing jobs, 4 million people a month are still quitting their job. So
when this hits the wall, about 3 million of those are going to be stuck without a job.
Yep. Thanks for reminding me, Mish.
You know.
All right, folks. We snuck that one in there at the end. Let's take one last trip through the indexes, shall we, before we wrap this one up. The Dow is right now up 736, still heading higher. Looks like it's running out of steam, but wow, 2.5%, up 736 points. S&P is up 103, or 2.82% higher. Again, still grinding higher, although it looks like it's losing steam here. And the NASDAQ, woo, high of the day, 361 points on the NASDAQ, up 3.34%. I just want to show you my NASDAQ chart here, folks. I called the break below that double bottom last week. I guess I was just a little too early because, wow, look at the bounce we got right back above that line. Again, I don't think this is Fed pivot. I don't think this is all is well in the economy and everything is good. I think this is mostly on the back of the weaker dollar. If I had to guess, I'd say maybe we got a few hundred more points. Maybe this rally goes on for a week, maybe two. Not much beyond that. That historically, these drawdowns in the dollar, they last anywhere from 2 to 4 weeks. We're already in the second, 2.5, maybe third week of this recovery or correction in the dollar. So it's got a little bit further to go. I don't think much more. I'm not looking too much into this rally. I don't think all is well and everything is going to be good and rosy and unicorns and rainbows. I don't think Fed pivot. Bull trap. Bull crap. It's a bull trap. That's what I say. Anyways, guys, by the way, I did not say, hi, Mom, hi, Dad, I love you guys. I'm supposed to say that at the beginning. I know Mom is worried. Mom, everything's fine. I'm not mad at you. I love you, Mom. And I think we're going to wrap it up there. I want to thank you guys for your time. Thank you for watching. Thank you, everybody, for the super chats, for the support of the channel. I really appreciate that. Thank you to my Patreon supporters. There is a link down below if you feel so inclined. We will be getting together tomorrow on Zoom, so look for that in the Patreon feed, guys. I'll be scheduling that later today. And, Mish, anything you want to add?
Find me in the wild.
Find Mish in the wild. There's a Merc in it for you. Mercury dime. Silver over $21 now, so it's quite valuable Mercury dime. All right, guys, we're going to wrap it up there. Thanks again, everybody. Until next time, live small and dream big.